I just want to welcome everybody to this third webinar in this AMEA Environmental Working Group Dialogue Series. I'm Casey Harrison. I'm the Chief Sustainability Officer at NURU International, but also leading this Environmental Working Group as a member, a full member of AMEA as well. And so I have this slide here, which will also be shared with those who participate and or have registered after. This just gives you an overview of what the AMEA Environmental Working Group is focused on and why we're convening these webinars in this series to help drive learning and basically codify best practices in delivering professionalized business development and technical assistance to farm organizations that align with regenerative ag, green economic opportunities, and carbon markets. So if there's more interest there, you can always reach out to me or anyone at AMEA. This slide is also kind of a hold slide to give some definitions for those who come to this maybe as a new participant in business development service sectors in each country where AMEA might have a local network or where your organization might work, which brings them into alignment with an ISO standard, ISO 18716. I won't go into this slide. It's here simply as a reminder and a hold that grounds us in the mission and vision and practice of AMEA. So with that, I'm very excited to introduce Tom and Peter from Downforce Technologies and Farm Africa, respectively, to share a little bit more about Downforce's technology and soil intelligence services, and then also how they're being leveraged by Farm Africa in Kenya. So with that, again, just thank you all for joining us for this third webinar series or listening and recording. And I'll pass it over to Peter, and I'll be driving the slides in the background. And again, questions in the chat are most welcome. So Peter, I want to welcome you here and let you introduce yourself.
Wonderful. Thank you, Casey. So hello, everybody. So my name's Peter Moss. I'm the CEO of Downforce Technologies, but I've been working closely with Tom and his colleagues at Farm Africa over the last year and a half to look at how we measure soil health at scale and apply that to projects that involve smallholder farmers. As a company, Downforce Technologies was set up by our founder, who was at the time the chief scientist at the UN Environment Programme, to try and accelerate the global transition towards sustainable agriculture. Literally globally, we're currently operating in about 22 countries, so we're some way towards that. But the goal being fundamentally to shift people away from the farming practices that degrade soil, that deplete the environment, and everything around that, and focus on strengthening resilience to climate change, and at the same time boost farm productivity. If we go on to the next slide. So why soil, I guess, and why soil organic carbon in particular, which is what we measure. Fundamentally, soil is a living, breathing microbiome that actually is very sensitive to what you do to it. And one of the best ways of measuring it and measuring the health of that microbiome is to look at the amount of soil organic matter that is in the soil. And a good proxy for that soil organic matter is soil organic carbon. So we focus on soil organic carbon, and the reason we do that is because it allows us to actually scale up the measurement of it using a combination of ground truth data and satellite, which I'll come on to. But if you increase the amount of soil organic matter or soil organic carbon in the soils, you're doing a whole range of different things which have all got benefits that improve a range of different things. So you're improving the soil structure, you're improving the ability for the water in that lands on the soil to be retained by the soil. You're reducing erosion. And at the same time, because the microbiome is healthier, you're improving the nutrients that are available to be transferred into the plants and then subsequently into food. That healthy soil microbiome ultimately means that the farmer can actually reduce input costs because they don't need as much fertilizer. It means they're increasingly actually resilient to climate shocks, in particular drought, because the moisture is being held more in the soils. You get higher crop yields as a consequence and more crop yield stability because of the change, because of the soil health. And better nutrient density in the food as well. So, which in turn lead to a whole range of sort of benefits. And the one I haven't mentioned is that by building soil organic carbon, you're actually also capturing carbon out of the atmosphere. A hugely valuable thing in today's world, which does mean that you can actually sort of report on improvements in
Go there with the scissors.
carbon
I don't
removal.
want that liberty.
Let's move on to the next slide. Now, traditionally, soil sampling is the way that you actually measure soil organic matter. What we do at Downforce actually is a hybrid approach where we're actually taking soil samples, but then we're actually adding a whole range of other data sets into that mix, including satellite data. And that allows us to actually look at a landscape. An area across a set of farms, both actually spatially and in time. So we're embracing the variability of the ecological system. We're looking at how things are varying across relatively small distances. We're capturing changes by making observations every 10 days from the satellite. And we're able to get down to a resolution which is 10 by 10 meter squared blocks. And that immense amount of data allows us to actually do a very accurate spatial analysis of what's going on and then transfer that into measurements that go back over time. If we go on to the next slide, Casey. Thank you. So how do we do that? Well, the data sets that we use are a real mix of different things, but fundamentally what we're doing is we're applying a set of scientific practices which are in peer-reviewed papers to model data, to model what's going on in the soils using 15 to 20 different data sets made up from data that actually comes predominantly from local and national databases. But it would include geophysical, ecological, environmental data sets, very importantly, weather-based data. And then we bring all of that together with the satellite data to actually turn that into a model, which allows us to predict how the soil organic carbon is changing over time. Backed up by the observations every 10 days, what we end up with is about 1 million data points every year for an area which is about 250 hectares. So a massive amount of data. Let's move on to the next slide. Which is all very good. It's grounded in science. It's actually based on peer-reviewed research papers. But just as importantly, we wanted to ground this in the standards that are required to report on carbon sequestration in particular, because actually a lot of what is driving action in this space is organizations that are focused on how they can take carbon out of the atmosphere, reduce emissions in their supply chain. And if you can demonstrate that you're removing carbon from the atmosphere, you can count that against the emissions in your supply chain and start to sort of demonstrate much more of a path towards net zero. Our founder, as I said earlier, Jacqueline McGlade, was chief scientist at the UN Environment Programme. But prior to that, Jackie was actually involved with the European Environment Agency for 10 years. She ran that and was actively involved in designing some of the sensors that are now on the satellites operating and are being used to measure natural capital around the world. Very much grounded in science, in the way that actually this whole space has evolved. And we've backed all of that up by working with a number of universities around the globe, just to run ground-based tests to make sure that the whole thing actually does hang together and reflects reality and not some fiction. Next slide, please. Now, what do we do for Farm Africa? I guess that's the interesting question for this particular sort of session. For Farm Africa, what we did is we took an area in Embu County in Kenya. And this area that we ran the assessment on was in total about 46,000 hectares. So we produced a map of that whole area covering the soil organic carbon stocks for the full region. Every 10-meter squared block across that 46,000 hectare sort of area of land. And that allowed us to accurately map the soil carbon stocks and the variability across that whole landscape. We did that in a way that actually allowed us to go back to 2018. So the beauty of using the satellite data is you can actually get a picture going backwards because the data exists. And that allowed us to actually piece together an understanding of how things were changing year on year over that period of time. And what Farm Africa had been doing was actually running a project with smallholder farms in that region over a 4 or 5 year period. Tom can clarify in a minute. So what we did was, having done that assessment, we then overlaid thousands of farms onto that landscape so that we could actually run an assessment of how the farms differed from the background in terms of change. So if you were talking in carbon project terms, the background region was the control environment, and the farms were actually the focus of our attention. And the goal was to understand how the farms had improved relative to the background. So we did that, and you can see in the middle picture very faintly there's some little yellow lines, and those each are smallholder farms. I think there were several thousand, 4,000 plus maybe farms that were actually uploaded into this region. And then what we did was we calculated the improvement over time. And the chart that you see on the right-hand side is showing how change was happening across that period of time, allowing you to sort of pull out the 3-year moving average, which is the sort of the variable line, but the underlying trajectory, which is down to the change in farm management, and that's the key thing. And the goal fundamentally was to demonstrate that soil health was improving in addition to all of the other benefits that have been bestowed on the farmers through this project, but demonstrate that soil health had got to a point where it was in much better shape than it had been at the beginning, and therefore there was better climate resilience as a result of that healthier soil. So that's what we did. Measurements at scale applied to small direct parcels of land, and then the results pulled out from each other so that we could actually demonstrate value. And fundamentally, that was our part in the project. Tom, over to you.
Thanks, Peter. Hi, everybody. Tom Cadogan, Director of Programs based here in Nairobi. I'll keep it quick there, but our work has been on landscape and market-led support for smallholders in the region, mainly from Ethiopia, Kenya, Tanzania, and Uganda. Now, Peter made a very good point and ended there in terms of generating through the Downforce technology platform the evidence to demonstrate an increase in climate resilience. And so my simple takeaway and message for colleagues here on this webinar today is how utilizing the soil data, when aligned to standards aligned business and technical advisory, ultimately leads to a lower risk, an agricultural risk, particularly for smallholder farmers, particularly for other colleagues online who are always being questioned about the commercial viability, for example, of smallholder farmers and what they're actually growing. So this was critical for us. This was approximately over 50,000 smallholders in both Embu and Tharakanithi. Embu, the more fertile, more rain-fed county compared to Tharakanithi, slightly more semi-arid, but we wanted to compare those. And we needed two independent systems from what was a typical pilot and donor-funded pilot from fantastic support from IKEA Foundation through AGRA. And we knew that the soil sampling would be taking place. For everybody, the soil sampling, and the report I'm free to share with you from Prof. AMEA Petmeriam, was excellent. That was over about 18 months of intensive 2,000 soil samples, directly relevant to where the Farm Africa village-based advisor approach had been taking place. And that village-based advisor approach, everybody, was a combination of excellent business advisory record keeping for these village-based advisors who are reaching out themselves to approximately 175 to 200 other smallholders, but also at the same time, that's incredibly rigorous and scientific. And is it affordable? You can't do that all the time. So the budgets for that were a lot more expensive than what we're able to look from the Downforce tech. And the 40,000 hectares, and probably gave Peter and his team too many headaches, because we kept on asking them to go back and go, could we just now zero in on non-Farm Africa plots and standard farmer practice? So this was excellent. The longue durée was great for us. We've always recognised the dearth in public expenditure funding, particularly through traditional Ministry of Agricultures, which used to do annual soil surveys or large ones based on the data sets, I believe, from 1984, certainly in Kenya and Tanzania, and the dearth in public extension officers. So as a result, these VBAs, a form of a private entrepreneurial form of input extensions, was a great way for us to assess and to get in beyond what we've seen in other measurements, which is really only people doing sampling of surveys in the field, and of course maybe through mobile phone surveys. So this data platform was critical in the soil data. Happy to share the stats which showed increased water infiltration, longer non-stress soil moisture, and less soil erosion. I think critically that longue durée was very important because for those of us based in the region, we have seen increasing periods of climate stress, drought periods. I remember the 2017 period in particular. So I was very interested to see the principal determination of soil organic carbon is going to be your weather patterns. But what we're able to see once you see adoption levels increase on the classic organic manure mulching applications of the regenerative agricultural approach is that these plots were beginning to hold their soil organic carbon for longer periods, even during drought periods. And that's a critical facet. Casey, let me just shift on to the next one. And as I'm well aware, as a member of AMEA, how the business advisory sector can get too detailed too quickly, just as our soil scientists can get too detailed too quickly. Particularly, they get excited when they see an increase in the number of nematodes in the soil. What's important to kind of look at this is soil organic carbon is driving better nutritional values and stronger incomes. So that I would argue, I don't think the consumer would understand that at the moment, certainly here in Kenya and elsewhere. But these are fantastic attributes when we've seen an increase in ability and lower costs, input costs for the smallholders as a result of the practice of the regenerative agriculture. But actually that's translating into improved crops and improved nutritional values and better incomes moving forward. Some of the data is there, but a simple aspect is it's not just the principal economic incentive. And I know Casey and the team are going to give us a few teaser questions later. But for adoption levels, I can safely say the principal economic incentive is a reduction in the amount of fertilizer that is required when coupled with microdosing and organic mulching and so forth and so on. So that leading that driver for a smallholder, leading that kind of adoption levels, plus the additional benefits, which, as we can see here, the higher SOC levels feeding soil biology and improving micronutrients in that soil is critical. So the basic loop, which we are saying for people from a kind of business and technical advisory, is with your soil organic carbon increasing, you have healthier, more fertile soil, you have more nutrition dense food, higher, steadier yields. That's a critical factor because we can't control the weather patterns for the following seasons. And with better nutrition and rising incomes, farmers are then reinvesting in that regenerative agricultural approach. I'll put a hand up here on behalf of all my colleagues, maybe from the CGIAR institutes, that the academic literature on regenerative agriculture is relatively little. Okay, so this is also a great way for us to kind of begin to test practically and provide some information along those levels. And just to finish, Casey, I think the point is pretty obvious. On the final slide for myself, it's that combination, remember, of the soil data combined with that business and technical advisory approach. Colleagues here, maybe from a more cash crop perspective, will understand the benefits of ensuring that cooperatives and producer organizations need to know their numbers in order that it can de-risk and actually manage their businesses effectively. The same is also true for those village-based advisors in community levels who are actually agri-entrepreneurs and potentially could, I would say, need about 5 to 6 different forms of income. They cannot just survive off just commission on inputs alone. They also need micro-aggregation opportunities. And there's a small third bucket there, potentially on business advisory services, which could include microinsurance and so forth. So that combination is a very, very powerful play in terms of the soil data coming together with the advisory, standards aligned, leads to less agricultural risk. Where I would like to see this as a kind of dream is, how can we get finance of an investable nature which can take this to scale elsewhere, including for those community enterprises which maybe not be aligned into maybe the more monolithic cooperative structures. Let me leave it there, Casey, and back to Peter or anybody else for further thoughts.
No, thank you so much, Tom. Thank you, Peter. That was a very concise and clear, I think, application of the technology that Downforce brings to bear into a clear case study that Farm Africa is leading, in Kenya. And so I think that's a really helpful way for us to pivot for the next 20 minutes or so to a bit of a conversation, especially with our audience. And just to note, we did have a bit of a Zoom glitch. So if your name is coming up as Ramona, and that's not your name, do feel free to rename yourself so we know who's there. Or if you have a question and you want to come off mute, just introduce yourself and where you're coming from. And then you can ask your question verbally if you'd like to today, since we're a smaller group of about 18 to 20 folks. So with that, do feel free to raise your hand at any time, and I'll cease asking some of the questions we've pre-prepared for discussion. But until then, we'll begin kind of digging into some of these with Tom and Peter. Unless Tom or Peter, you have any initial thoughts you want to share before we dive into the questions. I see you off mute, Peter, just in case.
No, let's get into the conversation. I think that's probably the best approach.
Okay. Cool. So these questions are essentially framed around the original goal of this AMEA Environmental Working Group. And so really thinking about, like you started to end there, Tom, the segmentation, different types of business archetypes, agri-SME archetypes, entrepreneurship models, and really thinking back to these core capacities that are needed to see a meaningful uptake of technological innovation, but really the analysis that comes with it, and then the application of that in the field. Because like you said, regenerative agriculture as well is a very nebulous term. It's hard to grab a hold of. It kind of slips through your fingers unless you tie it directly to practices on the ground. So I think that was a really salient point. And so for you and Peter, from this experience in this case study, bringing it back to what are some of the core kind of prerequisites or baseline capacities that the entrepreneurs may need, or maybe another business that would take on, cooperative, or you can spread it out beyond the program, but focusing kind of on the case study and then more broadly to the sector. What are those core capacities, and why are they so valuable to transferring technology into action?
Sure, Peter, I'll just give a brief response if that's okay. I don't know for others who have been in the field, but one thing I've come across a fair bit in the past 6 years has been the professor of soil scientist, of soil science rather, who will say, but we know all this. We know all about climate smart agriculture. We all know all about organic mulching and its benefits. Why hasn't it been adopted at scale? And so then you will get into technological, depending on your perspective in the sector, whether you are on the input markets or on the output markets, whether you're an investor, you get the respective answers. The dearth of investment, as I was raising, in extension models. Actually, I think it comes down to, and this will interest this colleagues on the network, whether it's the farmers, whether it is your champion lead village-based advisors, whether it's the broader farmer organizations, they do need the technical capacity to interpret and apply forms of soil intelligence and the farm economic value attributed to it. That, for me, is the key switch. So if you can demonstrate to farmers and others and other institutions and private sector commercial supply chain actors that economic value, then you start to see it. I remember having conversations, and I'll just end there, about 3 or 4 years ago with breweries here in Kenya, but for the region, who could see, and it was the procurement lead who actually was able to say, I could see this working, but I'm going to have to readjust the profit line from maybe 3 or 4 years to about 7. And then I can get my board investing. So economic value, I think, is critical to translate that soil intelligence. Very important.
No, thank you for that, Tom. Peter, anything else you wanted to add there?
Yeah, I mean, I guess not specific to this project, but I think people generally are a little scared of change, and that's and that means that in order to actually get change to happen, you need to support people through something, or you need to give them a good reason for them to actually undertake that change, undergo that change. And we see it in developed markets with commercial organizations just as much as we do elsewhere. But until an organization actually understands the downsides of what they're doing or the benefits of what they could be doing, and someone shows them how to shift from A to B, that change doesn't often happen. We have lots of examples in other countries that we've done work in where actually the older generation of farmers who have been actually operating for 30 years, doing the same thing, applying the same levels of fertilizers, or perhaps even sort of upping the levels of fertilizers to improve yield, actually aren't prepared to change. But as soon as the next generation comes forward and takes over from them, then their minds are much more open, and they'll consider doing other things. And I think that change is the key thing. I think the big value of extension networks and organizations like Farm Africa is supporting people through that change, and that is not to be underestimated. It's a huge value.
No, that was a great point. Excuse me, I hit the wrong button on the screen share, so I'm going to go back to the slides. I apologize, everyone, but that's an excellent point. And not undervaluing the technical assistance becomes so incredibly important as well. So it's like, as I get myself reoriented, I wanted to touch on the point you two were making. I hope I'm sharing the right side of the screen right now, that everyone's able to see the questions again back up on the screen.
Yeah.
Okay. Yeah, no, I mean, the focus on core capacities, and I think the ability to interpret technology from our work at NURU and also other AMEA members that we've seen, I mean, clearly there is this need to set aside some form of funding and finance to ensure technical assistance is properly invested in. I think what I've heard most as a pain point is the hesitance, I would call it, essentially, to put the proper amount of money into that timeline, that 7 years you mentioned, Tom, to see that return, where technical assistance can really take time to lead to change. Because both, as you noted, Peter, some of these changes take generations to see new adoption of new technologies and new techniques. Some can be driven by shocks, right? Like the shock we're experiencing right now with the rise in fertilizer prices around the world, especially in the developing world, and a lack of supply in some cases. So it's interesting to be able to ride these waves of shocks and stressors, to be able to identify points of action and periods in which there's like a catalyst for change, and really acknowledging that openly, especially when it comes to the adoption of technologies that might need to be demystified for any one of us at a certain period in our career, but also then need to be translated in a way that's useful and practical on the ground and in a local county, in a county and sub-county in Kenya or anywhere else in rural communities. So I find that to be really valuable. That was the idea, the thought I wanted to share in reference to what you just shared, as I had technical difficulties myself. But to let me make sure we're still monitoring the chat. So if anybody has any questions, but if not, we'll kind of move forward on to the next question here, which is really more about that willingness to pay for these types of services. And there's a lot of literature and work that's been done by many of our peers around bundling services together so farmers can continue to pay for the service over time. There's the, kind of the concept of embedding it in crop loans and access to fertilizer, which Tom somewhat alluded to a way earlier. I was curious from both of your perspectives. One, Peter, from the technology firm side that has their own bottom line to meet, and Tom from the implementers and practitioner side. How do you see that long-term willingness to play? And really, it's a spectrum or a dynamic depending on the context in which it's being applied. And then what role might other types of businesses, co-ops, agri-SMEs, play in helping to either ease the hesitance in order to communicate the economic value of adopting the technology, and as you've explained, or to help spread the value of the technology to reach a larger population at scale at a lower cost. So thinking through kind of the role that agri-SMEs would play in that willingness to pay debate.
So let me start. I mean we've tried a number of different approaches in Kenya in particular without much luck. So I'm going to broaden the conversation out a little bit and actually talk about the experience we've had elsewhere. But our experience is that there's still a big debate going on in the market, I think, around who pays and who pays not just for the monitoring, but actually who pays for the transition costs. Because I think for a lot of farmers, this isn't necessarily going to be something that is straightforward and capital free. So if you're running a commercial farm and you want to stop plowing, you might need to change some of your equipment from a plow to a direct drill, for example. And so the debate is out about who actually sort of finances the transition, and then actually who pays for the ongoing monitoring subsequent to that. Now, we've got three or four models actually in our customer base right now. We've got some organizations can either be aggregators that are taking crops from a series of farms, or it can be larger scale farms who are actively seeking to demonstrate that they're farming in a sustainable way and they're looking to generate a premium on the product that they're selling to their customers. And we've had that working in a number of different sort of markets. So that's one model. In some instances, it's the larger food companies that are paying the farmer to encourage change, and they're doing that because one, they're worried about the risk of supply. Because if you're a food company and you can't get the source materials to put through your factories, then your business is ruined. So they are worried about the risk to supply and therefore want to understand where those risks are. But they're also driven by Scope 3 reporting, so reporting in their supply chain, and the increasing regulation, albeit not yet mandatory in most places, the increasing regulation around reporting that in their annual accounts. So those are two models. The third one is much more of a financial play. And so we've got our largest client, in fact, is a bank. And the bank are actually paying us to monitor the soil because they believe that if the farmers are encouraged to understand how their soil is evolving, they're likely to be more resilient in their farming practices, and they're more likely to pay the money back for the loans to the bank. So for the bank, it's a credit risk play, and they are absolutely committed to this. As a byproduct, they get some reporting that they can actually sort of put into their annual accounts as well. But their fundamental driver is credit risk. And then the other conversation where we've had a lot of discussion but not a lot of action so far is insurance, where potentially insurance companies who are insuring crop yields might want to encourage people to protect themselves against yield shocks, so that actually they're paying out less in insurance claims. But that model hasn't quite solidified, but I think it will come. I think it's only a matter of time. So that's it from me.
Yeah, Peter's highlighted it very clearly there. I think this network knows in particular where formal finance, particularly for agricultural finance, has not come down to a certain level. So there is one perspective I would say, which is, of course, certainly in the region here in the Eastern Horn, local banks aren't going to be able to be lending to hundreds of thousands of SMEs because of the statutory minimum reserve of the central banks. And it's more affordable and more lucrative for them to be making money on the government bonds. Simple. So till that regulatory shift, which none of us are involved in, there's great work which I know Casey, Mark, and the team can showcase from Aceli and others in forthcoming weeks. There's that finance gap. So is our issue an issue of capital? Number one, people are talking about the climate finance gap and credit finance gap of about 240 million, just for example, for African smallholders. Nonetheless, I would argue that there is a case for local climate resilience financial institutions, and I include in that cooperatives, microcredit unions, microinsurance opportunities, microinsurance institutions rather, excellent opportunity to get different forms of finance down into those institutions, not subsidized, but in order that you can start practicing and de-risking what a credit risk profile is. Then that attracts. So just a very simple example for colleagues on this line, coming from my superb colleagues in Ethiopia, was when we were able to get some basic private sector working capital deployed from the markets through Lion's Head into some microinsurance institutions in a far region in Ethiopia. At the same time, the technical advisory of grouping together women agropastoralists through village saving loans and also improved CSA and adoption levels meant they were able to group purchase those insurance products, and as a result are protected against a climate shock. So there's almost like a normal, here's the financial gap case, but without the climate resilient shocks. But we have to accept that climate resilient shocks are on the increase. Therefore, we should use this as an excuse to try and tailor climate finance to the different types of institutions you're doing here, cooperatives, agri-SMEs, and others. I would definitely lobby for never give anybody a non-returnable cash grant. Please improve the ability of people to manage revolving loan funds. Even though they might be, from a donor perspective, subsidized, they're incredibly useful. They put people on a graduation pathway. So there's two dynamics here. What would be the investment case, including with blended finance from climate finance perspectives, and what's the TA needed, standards aligned, which can de-risk it at the same time. We need to get some of these examples out and see which of those can be scaled up. But I would, for those who would pay for the long-term digital soil monitoring, I would argue that should be part of the investment case. And we see the investment levels and the new tech are then adopted. If you're going to see it, and I've seen quite a few agri-tech platforms, they shall remain nameless, who've done great uptake. And as soon as the respective NGO moved away, adoption levels stopped because the guys and girls were getting it for free. That kind of, I think they were trying to do the old, when the text messages started coming here, I'm showing my age, in early 2000s. Then as a result, people had it for free. Then a small charge was introduced and people had already the behavior was there. So we've definitely seen a problem from adoption levels in terms of people willing to pay. So I think if that could be, because cash liquidity is going to be incredibly limited in these smaller enterprises, if we could address that, but recognize that farmers are still paying for it, then we might be onto something.
No, those are great. You guys combined your points really clearly, and it makes. I mean, that's those are some really valuable lessons to kind of summarize there too. Especially a few of the points you made on ensure the value to insurance down the line of this type of soil intelligence, soil organic carbon measurement. Similarly, identifying and insulating risk from a bank portfolio and due diligence perspective, whether that's domestically or at a more international level. I think those are great points, Peter, in those cases, working through supply chain management and sustainability goals with corporates who have that interest and transferring that technology and then bringing that to bear in terms of on the ground experience, like Tom said, of not, providing grant-based finance that does not include a farmer responsibility to repay to a revolving fund doesn't build sustainable usage and is not adoption at the end of the day. And you guys made that point really clearly. And those are connected systems, right? We're talking about blended finance that reaches impact on the ground. We're talking about that right combination and sweet spot of mix between technical assistance that's there for the medium to long term and can be sustained by some sort of entity that's with the farmers along the way. But then simultaneously, it's what will create the value in the monitoring, actually leading to credit risk insulation, risk mitigation at the end of the day, because there's actually someone looking at the monitoring data, both at the level of the investor, but also at the level of the farmer. And I think connecting those ideas is really important. So I really appreciate you both sharing that, because that, for everyone's awareness, none of that was pre-prepared. These are just some questions we put out, and these are just Tom and Peter's kind of unfiltered thoughts. So I appreciate it very much.
Can I just pick up on the question that was in the
the one in the chat, the soil data, that was the next transition.
So the data ownership, because I think the things are related to some extent, right? So I think ultimately where we're going to land is that providing evidence that food is being grown in a nutritional way, sustainably, without damaging the land, is going to be increasingly evidence that the farmer needs to provide to their supply chain customers in the commercial world. Smallholder world, where a lot of the food gets consumed and the rest is sold in the local market, maybe it's a less of an issue. But I think the data becomes evidence of demonstration of doing a good job. I think who owns that data actually does depend on who pays for it to be created in the first instance. And certainly in our case, where we don't need to actually go to the farm to do the assessment and generate the data, all we need are the farm boundaries. Then actually, I don't know that the farmer has such a claim on the data. I think it's much more down to who owns it. Who pays for it. In the case of our bank client, if the bank is paying for the data and giving it to the farmer, who owns it? I would argue the bank. So I don't think it's a straightforward conversation. I think if you have to take soil samples and the farmer is paying for those soil samples to be taken, then it's a very clear-cut case. The farmer owns the data, right? But that's not often the situation.
Yeah, and it's very interesting to hear whoever asked the question because of recent data protection laws. And it's becoming increasingly the case. And as we saw, and when I was working in Tanzania, we were told you don't need soil surveys. Here's the fertilizer solution that you need. So it's also a question of who is owning that for what was previously publicly available, or indeed, as my in-laws here would be saying, you could go down the road and get the latest high quality input, sapling, whatever it would be, from the local extension officers or from the local forestry officer. That's changed now. because the state has been pulled back and you're looking at more pluralistic forms of economy, at least in this part of the world, this region. So data protection, that is going to be very important. I think Peter's highlighted that point quite well. Who's paid for it probably ends up then owning that particular piece of data on land.
No, great. We have two other questions that come through in the chat. I'd like to try to get to both of them. We have a few minutes left. So the first one is from Mark, and it's really focused on the cost structure of the actual, per plot soil sampling overall, basically across the project. We're getting a sense of scalability, and that's there in the chat. Mark, if you have anything you want to add to that, feel free to come off mute and add it verbally.
Yeah, no, nothing really. It's just getting an understanding of the numbers coming from the accountant's perspective, and so.
Always a good question to ask. So you framed it around the bank example, right? The bank is our largest client, and for us, the costs of doing something at larger scale are lower. So the price to the client comes down. So the bank is paying £1 a hectare because they're a UK client. Our prices typically start at around about £5 a hectare, or $5 in the US. Actually, also $5 in Australia, even though the Australian dollar is a lot less. But in Africa, we've tended to be a bit more flexible because the money isn't in the market to actually sort of warrant even those sorts of prices. So sometimes the prices are even lower in some African contexts.
Okay, yeah, and it's just interesting to compare, so the total cost of that, however much it comes to the credit risk that they think that they are, sort of managing as a result, and seeing are they are they being too optimistic in some ways, or does it actually make economic sense, from that perspective?
They are convinced it makes economic sense. But have they actually done financial credit risk calculations yet? No. They're working up to that, but they're not there yet.
Yeah, no, be very interesting, I'm sure. Yeah.
And Mark, the point also here, but I'll certainly send over a separate survey. It's basically a basic social economic survey, more looking at the kind of viability of the village-based advisor model. Okay, and we were very upfront and saying we think it works on two fronts: input and output markets, and maybe some business advisory. But we were still saying that that's purely down to be careful of. Are you talking about food crops? Are you talking about maize? Are you talking about beans here? For example, maize in this part of the world, the margins are infinitesimally small. The amount of land that you require, no, that is not going to be an economically viable model for an average smallholder, 2.5 hectares and under. However, if we're talking about climate resilient, high value agricultural solutions for smallholders and potentially under a hectare, we're talking about spice, we're talking about horticulture, you're talking about fruit from agroforestry trees, then absolutely there's a viability there. Yeah. So this one, just for everyone's benefit, was purely on food crops in terms of not a food security initiative, but to see could the soil health be repaired, and it's the kind of thing that people have been doing. Funnily enough, a lot of the opportunities have been for people to be practicing soya production because the off-takers were there and demanding soya. And that's one of the easiest, simple, natural nitrogen fixes that smallholders could put in terms of their crop rotation. So absolutely, I think we'd have to kind of come up with segmentation of cost per farmer per plot, but also the crop and ag diversification that you have, because there should be no farmer, even large scale, who should be monocropping in this day and age.
Good stuff.
Yeah, it's a great point at the end, especially around segmentation and the further, categorization of different areas for these types of projects, thinking about value chain and mixed production systems, especially which predominate for the majority of the smallholder farmers across many of the sub-Saharan African countries who are in those cereal belts, right? With less than that 2.5 hectares of land, like you noted, Tom. So that kind of comes back to how does the solution scale, right? Even in those markets that are not cocoa, coffee, et cetera. Right, exactly. Palm oil. Exactly. Well, there's one last question. I want to respect everybody's time, so we're over it. But if there's any parting thoughts on your partnership, um, and really how it's helped bridge this gap around the chat. But I wanted to at least kind of tee it up as kind of your last parting thoughts about your partnership, the value you put on it, and the outcomes you were able to achieve together, which you explained, but just kind of set the stage for kind of closing us out today.
Well, let me comment first, and then I'll let Tom go. I think so. The partnership is very good. We have a great working relationship, and we hope to do more projects together. But I think actually the partnership is more powerful in the sense that what we're doing is we're demonstrating the art of the possible in a country where policy questions are being asked about this. So actually, our founder Jackie, who lives in Nairobi as well, actually is now working with 10 county governors to look at whether we can actually encourage policy change, and also talking to the national government about whether they can fund some part of that as well. So it's I think the partnership has been very successful, and Tom and his team in Kenya have done a great job of actually talking about it and sort of using it as an example. And I think the goal is fundamentally to sort of spread that more widely as well. But Tom, I'll let you comment on the partnership as well.
Yeah. Well, actually, Casey, I thought I was looking forward to free advisory from Downforce Technology for the next 5 years. That's what I got promised by the founder. No, just jokes aside, superb partnership. I had to take a punt on this and ask my board, could we pay for it initially? I was a bit nervous. And I must say thank you very much to Josephine Wapakabulo, who first introduced us to Jackie and to Peter. And so for us now, I would whatever the investment case would be, I want to see how can I take this satellite permissions all being obeyed, respective countries, to other areas in the region. We've got a particular Tanzanian example in the offing, and the same is the reference and example that Peter was giving for Jackie. And how can we get national or banks beginning to finance this, equity locally, NMB in Tanzania? I'd be very interested because I want the viability or the commercial viability of the platform to succeed. I want then the facilitation for our TA and business advisory to succeed so that we can create those sustainable elements. And that, who knows, you might be getting cooperatives or institutions and financial institutions backing this as a result of seeing its effectiveness. So at the moment, there's no way around it. It's like in any business, you've got to get out there and you've got to get the startup funding. You've got to go beyond that. You've got to start getting some large term contracts. But I think this example gives us a fantastic platform to do that. And then we can talk about scale and not just in one particular country or one particular zone.
That's a great place to end. Thank you both so much. Thank you everyone who hung with us all the way through to the end. And for the purposes of the recording, this will be shared, as was noted in the chat, on AMEA's LinkedIn. It'll be available on AMEA's website as well. So we look forward to sharing that around with everyone else who was unable to join us live. But thank you all so much for today. I really appreciate it.